Remember, please hit like and subscribe for me. Thank you so much. Okay, let's go. Hi, everyone. Today is Thursday. We've got a jobs number coming in about 9 minutes. Not sure it's going to matter, but it is the Moneyball Morning Report for the Benzinga Pro platform. I've got my sidekick working down here, so we're just going to stare at the charts right now. Opening range pretty wide. This, of course, was the Fed space. As we know, what the traders have been doing is buying the dips, and the bottom of the range that we had over here made a great buy. For me, I jumped in kind of early, but I only did it with one ES, and so I was able to take about $500 of heat, maybe even $600 of heat before it turned around and moved like I thought it would. And why did I think it would reverse? One, we're sitting in this big, fat, massive range, and that's going to really be running the show. Overnight, we are long inventory. The cumulative delta is 6,100 right now, and so that's pretty bullish. Yesterday down here, it was about 11,000, negative 11,000, and so we do know that the traders, when the delta is this negative, these traders have to cover their positions so that their delta can be reduced to zero. That's what happens with the spike. It makes a beautiful trading setup for those of us that trade futures. It's fantastic. So one of these days we'll get all of this put into one platform instead of having to look at three. So that being said, here's what we're staring down. Opening range formation today in the ES, high 6,444.75, low 6,431. I would be looking at the top of the opening range because it is very close to this old area of heavy accumulation that then began distribution. So the traders should hold if price action is going to move up. My thought is the following, however. The very biggest orders I saw in yesterday's formations were selling. We had two dissenters at the FOMC meeting. I don't know if that matters, but there feels like motion that's going to send us right back into this big fat range. So what does that mean? Here is the opening range for, what day is that? I don't know. Several days ago, last week sometime. But here's what we need to see. See how we're battling against it? Right? If we stay above this range, we're going to have a lot more short covering, and it's going to send us up into these higher areas. So you want to be really careful here. Positioning, my thought would be, how about waiting until it gets to the really fat area to go long? Just zoom out, put yourself an order in there. I don't even like trading in this heavy congestion to be sure, but we can see that that's a possibility, right? Upward flow. I forgot to start Otter today, folks. I am so sorry. So we don't have Otter today. Anyways, so here we go. Support ledge. Value area high, 6,436. Value area low, 6,387. It's a mosh pit, but here's what's getting framed out. These hourly opening ranges are telling us where we have opportunity that says, listen, we could break out to the top of the range, which is 6,468. Or the bottom of the range, right? We've got a lot of volatility that, the vol numbers for the week, look at how far away they are on the upside. Downside, we clipped all of them, which also, ding ding, pretty important. And now we're just sort of sitting in this major pocket. Dips are definitely buys. Those are the areas to look. Everything else, it's a bit of a crapshoot, especially since we are seeing some measurement of distribution and we've got momentum that says, why don't we see if we can pull into the low of the opening range, try it there, right? That'll be my first shot at a long today, unless I'm scalping. All right, let's go to the NQ. Oops. Gold still is not fixed, so I'm not even going to cover gold today because it's tracking the wrong contract. It's tracking the last contract, and we've really had significant roll, and of course in Top Step we have that roll together too, so no gold today. All right, taking a look at the NQ, very big overnight volume, bullish, right? We've got positive delta there. High of the opening range is Wednesday's vol. Today we've got a slurry of earnings, and they're going to be very NASDAQ intensive. We might see folks leveraging towards the end of the day. Not sure. I'm doing a show with Mentor Q today, and we will be staring down those instruments, particularly trying to see how price action is going to move relative to those spaces. So, going to be good. All right. What do we want to see? Opening range high, 23,744. Opening range low, 23,686. Look at what they tried to do. Bounce right off that opening range breakout. It seems very likely that we get ourselves another pop that should fade, but remember, movement comes into this market at around 9:12 and then 9:20-ish Eastern time. So watch for the wiggles right in this space. And we probably are going to have ourselves a great big wiggle with the jobs number that's going to come in less than 90 seconds. So we'll see what's going on there. All right. High end implied vol movement, 23,832. 23,907. That's also the average daily range expansion event up here. Point of control way down here. This is where all the magic, not really, all the garbage is getting churned, right? So way down in the POC, the point of control, 23,488. And then right there into yesterday's lows, we've got ourselves this region I think is very critical, which is about 23,300. All right, let's take a look at the YM. YM, still pretty awful, right? Very sideways, but bottom of the range. Let's see what happens. So far, high, low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. I think the bounces get sold. And this really means a fair bit in terms of this underlying thought about distribution actually happening. So what is this distribution? They're just selling, right? That's their fancy word for selling. There's distribution going on at these high levels. Once it gets up here, big money uses this opportunity to fade the formation. Okay, so what are we looking at? Bounces as sell zones. My thought would be, noticed yesterday, several days ago, that opening range formation gave us the trouble here. This is 2 days ago, opening range formation, and right now, what we're trying to do is recover yesterday's opening range formation. So what does this tell us? This area is in balance and in range. It's business as usual, which is usually sell the top, buy the bottom, except that we have this earnings number coming in, and I think it's popping through. I can see some movement in my trading platforms. Okay, so opening range in the YM. High, 44,725. Low, 44,647. This is a negative formation, so the bounces should give me sell zones. Notice this chart is entering that opening range. Watch it come to the bottom. If you're looking for a long, this is a hard place to look for a long unless you're way at the bottom of the range. See the big fat price action right here? Looking down at the bottom is going to give you a nice, really low risk, high reward trade into the ranges that look heavily congested. Otherwise, you're going to have to scalp trade this. It's going to be pretty ugly, right? So it's up to you. I just would prefer not to go where, alligators are swimming. All right, here we are with oil. What is oil telling us? Big move up. As I mentioned yesterday, these sanction things with Putin, hey, you got 10 days. That guy, okay. Sanctions are not going to put the kibosh on the transfer of oil. Now, we are in a space where we need more energy, so oil is probably going to rise quite significantly over the next few years, as will natural gas, as will all of those things that create energy for us. Right now, this is a reflexive motion based on what got said. Okay, where are we? 69.38. The machine learning tool said that's major resistance. We blew right through it, and now we're retesting it. This is going to be a big area of a hold. It also happens to be yesterday's opening range. Could you buy it here? Absolutely. It's trending. Just know where your stop is. So if it came down to 69.10, beautiful long. If not, if it can't get back up over 69.78, it's going to come in and fill this low volume profile, right? And that is very, very likely. Today's opening range, clear shorting action. Bounced up, couldn't get past the highs, bounced down, retested the opening range low, and then it was a fade into the prior opening range. Now, the next opening range in the context of all of this actually moves back over here, and that's why I'm looking at this 68.56 as a key level of frontline support in this near term, but I do expect reflexive action that pulls us back. That's what we expect. And so I'm looking at 67.75. If it does rise, we've got 71.96 as the next line in the sand with a little bit of a stop at 71. All right, last one, because we're not covering gold today. Sorry, I have to wait until the charts come back into view. Look at this. Gap up, selling off the entire time. Jobs number came. That's a little bit of a nothing burger. Price action, still sitting. That's jobless claims. Tomorrow is the really big number. So what do we have as the opening range for SPY? High, $641.44. Low, $640.92. The break above it, going to give us some buying pressure. So far, we are looking at the failure of the break below it for continuation. And so far, As long as we don't get up over $641, we're going to fill the gap and come back into the value area, okay, until it builds back. So that is my thought. Fade action on the horizon. And if they hold all of these opening formations, and they don't, meaning we can't get below $639.20, we're going to see higher prices. Momentum incredibly high right now. We'll just see how it goes. All right, folks, that's it for me. I'll see you on the streams.